Hello, I'm Chris Arthur, Senior Vice President and Portfolio Strategist at LPL Financial Research. We've been working on an innovative portfolio management methodology at LPL Financial called Quad Core. These portfolios represent the latest evolution of LPL Financial's research's portfolio construction process and are comprised of exchange-traded products and mutual funds. I'd like to introduce the concept to you today. One of the lessons of the 2008 financial crisis, and even the years since, is that in some cases traditional portfolio diversification failed. The traditional stock and bond approach to investing may have failed to provide the downside protection that investors relied upon. Rising correlations across different investments, the degree to which investments move in tandem, undermine diversification. In fact, in recent years, U.S. Treasuries have been one of the only effective diversifiers. And that brings me to another need for Quad Core, to diversify away from expensive, high-quality bonds, such as U.S. Treasuries. A 30-year bull market in bonds, as measured by the Barclays Aggregate Index, has led to extremely high valuations and record low yields across the bond market. While we do not believe a bond bear market is imminent, the ability of the bond market to provide downside protection in the future years may be greatly constrained based on our analysis and bond market projections. We need a better way to invest. One strategy you may have heard of is core satellite investing approach, which involves combining a core portfolio of passively managed investments, either mutual funds or ETFs, with a portfolio that's more active in attempts to drive a portfolio's excess return. While this approach to portfolio construction can make sense, we believe it has a few drawbacks as well. One of the risks to this method is that the core of your portfolio is constructed properly. If the core fails, you have potential negative consequences for one's portfolio. So, what may be a better alternative than a portfolio with a core holding? A portfolio with multiple core holdings. We believe 4 to be exact, and we call this portfolio construction technique Quad Core. At all times, portfolios that utilize the Quad Core methodology and will be comprised of ideas from each of the 4 central categories. I'll get into this momentarily. However, the allocation among the 4 portions will fluctuate over time, depending on market conditions and our outlook. Our Quad Core methodology is comprised of 4 parts. The first 2, seeking to generate strong returns. First, LPL Financial Research Opportunistic Ideas. This component is a core portfolio of our favorite investment opportunities based on the LPL Financial Research investment process. It incorporates momentum ideas driven by our technical analysis, which helps capitalize on market fluctuations and reduces emotional bias. This component may also include a contrarian or out-of-favor investment ideas in order to over-diversify by encompassing investments which we feel are currently unpopular. These LPL Financial Research ideas will seek to help the portfolio realize gains on the upside and help protect from losses on the downside. Second, diversifying strategies. The Quad Core philosophy takes a think differently approach to investing. We believe some investors, including us, have biases in how we invest. In this core component, we look for broad diversifying strategies that are different to that of LPL Financial Research. We believe that investing in the strategies that have different views of the markets than we do is one way of adding diversification. The second 2 cores are focused on helping manage risk. The third, counterbalancing alternative strategies. Alternative strategies are an integral part of the Quad Core approach. Alternative strategies have demonstrated an ability to provide diversification benefits. And having a strategic allocation which trades much less often than the other components of the portfolio, and implementing a wide variety of alternative strategies is an attempt to pursue rates of return while managing risk at the same time. And lastly, hedging strategies. Tactical hedging strategies are core to the philosophy and will help ensure that there is a downside protecting bias in these portfolios. In this way, Quad Core portfolios seek to reduce the impact of severe downside market shocks, often referred to as black swan events, and should help build robust portfolios. In conclusion, we believe that the future of portfolio construction is a migration from core satellite approach to a Quad Core approach. By focusing on 4 core elements of the construction process, 2 focused on return and 2 focused on risk, we believe we are suited to address the ever-changing market environment. I hope this introduction to Quad Core was helpful. We plan to bring you additional videos that dig deeper into Quad Core in coming months. Thank you for listening, and thank you for your business.